Hey, this is Matt from InvestiQuant. Today is Friday, October 23rd, 2020. This morning we saw the markets gap up and we have sold off kind of quietly throughout the session. It feels like the market's kind of been struggling to go lower, but it has been going lower. And then this afternoon, it looks like we found some buyers come in just shy of the midpoint of yesterday's session. So if you look at this top chart here on the top left, I've got the S&P, and I've got a Fibonacci tool that is drawn around yesterday's low to high, and I've marked off the half back area, the 50% retracement of yesterday's range. And you can see today's action, we gapped up above the prior day high. We dropped down a little bit shy of the midpoint of yesterday's session, and then we have started to bounce and work our way back towards yesterday's close. We're still within the prior session's trading range though. And what I wanted to do this afternoon is look at this type of pattern and see what that has led to into the close specifically on a Friday afternoon. So let's take a look at that and Discover. I'm going to go into Discover and I'm going to select all four instruments. Then I'm going to use a time-based entry that gets long at 3 p.m. Eastern Time. It exits at the close, which is 4:15 p.m. Eastern Time. For our opening filter, I'm simply going to say that we gapped up. We gapped above the prior day high, but I'm trying to keep this a little bit broader to try to get a bunch of samples in this test. So I've selected gap up there. Next, I'm going to go into the post-open filters section, and I am going to go into the section that allows you to test where is the closing price as of the time of the entry, which I've got set to 3 p.m. Eastern Time. So I'm going to say that it is above the prior day midpoint, but it is still within the prior day range. So we're trading in the top half of yesterday's range. Next, I'm going to go into indicators, and again, trying to keep as many samples as possible. I'm just going to use above a 200-day simple moving average. I normally add a 10-day as well to this, but I want to keep as many samples as possible since I'm using a day of the week. And then lastly, I'm going to go into calendar, and I'm going to say that it is a Friday afternoon that this is taking place on. So let me get that added, and then I'll click View Results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time when it is a Friday and you gapped up in the morning, and then at 3 p.m. you're trading in the top half of the prior day's range. This has taken place above a 200-day simple moving average, and we've got good sample sizes here. We've got 114 samples in the S&P, 112 in the NASDAQ, 93 in the Dow, and 107 in the Russell. And if we take a look at the win rates, they are fairly consistent across all four. You've got the S&P coming in at 59%, the NASDAQ coming in a little bit stronger, 62%, the Dow, 55%, and the Russell, 60%. If we look at the average win, average loss, these are all fairly similar. They're not exactly the same, but average win just a touch bigger than the average win in the S&P, just a touch bigger in the NASDAQ. The same with the Dow, just a little bit bigger than the average loss, and with the Russell, the average win is just a little bit bigger than the average loss. So the average win on all four of them is just slightly larger than the average loss, but not significantly. And the win rates on all four of them are skewed a little bit to the long side as well. So historically, a little bit more of a bullish pattern as we approach the close into this Friday afternoon. So hopefully you found that helpful. Good luck the rest of the day. Have a great weekend, and we will see you next week.